The noes have it. The noes have it. The clerk will now proceed to read the orders of the day.
Building Societies Act 1986, Amendment Bill, second reading.
Now, Julie Elliott.
Thank you, Madam Deputy Speaker. I beg to move that the bill be now read a second time. It was a privilege to come out at the top of the private members' bill ballot in this parliamentary session. It is a ballot I've entered at every opportunity since I was first elected in 2010. So it was great to be drawn, but to be drawn first is a huge responsibility. I was on my way to get the train to my constituency in Sunderland when I came off the tube at King's Cross. My phone had dozens of messages. My immediate reaction was that the government must have called a general election. But no, that's something else we can look forward to in the year ahead. I had in fact been drawn at the top of the private members' bill. I'm delighted to be here presenting this bill that will make important and long-awaited amendments to the Building Society Act 1986. It is a bill that the sector wants, it is a bill that is true to labour and cooperative values, and importantly, it is a bill that has received support from the government as well. Although this bill does not solve all of the issues in the broken housing market today, it could free up more availability of money to lend in mortgages. And as building societies lend more in percentage terms to first-time buyers, then it should enable more first-time buyers to get on the housing ladder. Clearly, there needs to be wholesale reform of the rental market as well in order to improve the housing crisis we have in this country today. I must first take this opportunity to thank everyone who contacted me about issues with proposals for potential bills. Many of the issues I would have happily taken forward as my bill, but I can only choose one. However, the bill I have chosen, I feel, can make a real difference to people's lives, especially young people. A bill that I hope will support first-time buyers and more community-based banking in the interests of working people.
Will she give way on that?
Of course.
Thank my honourable friend for giving way. Obviously, the entire point of building societies was to truly compete on a level playing field with banks in the first place. So they were founded to enable working people to own their own homes. So that's why this bill is so important, to expand that ownership, particularly to young people, as you said, and first-time buyers. So does you agree with me that absolutely we should be doing this, but it should have already been done?
Absolutely, I do agree with that, but the bureaucracy of government sometimes gets in the way of things happening. The Building Societies 1986 Amendment Bill is a bill that will help level the playing field for building societies to compete more fairly with banks. It will support them to lend more money in a safe and secure way. Over half of building society lending goes to first-time buyers, 55%. And crucially, as the building society sector directs a greater proportion of lending to first-time buyers as opposed to banks, there's a theme here. This will benefit more people looking to get into the housing ladder. Modernisation of building society legislation is long overdue. There are some archaic requirements around the way they fund themselves that puts them at a competitive disadvantage when compared to banks. Competition in banking is good for consumers, and given building societies drive innovation, particularly in supporting first-time buyers, strengthening the sector is a great route to supporting aspiration across the UK. At the same time, supporting a sector that works cooperatively and mutually. Building societies work for the benefit of their members, people up and down this country, engaging in a system of cooperative banking for mutual benefit and not for profit. We are lucky to have 3 building societies in my constituency of Sunderland Central. Newcastle, Yorkshire and Nationwide Building Societies all have branches in Sunderland. So I see the excellent support they give to members firsthand. Having a branch that people can go to talk through any financial issues and receive the support they need face-to-face is incredibly important to my constituents. I see the work of building societies as both a strong British tradition and as a strong Labour tradition. I'm delighted to have the support of the Cooperative Party and the Building Societies Association, who represent both of these traditions. The first form of a building society was in 1775, when Richard Ketley brought people together in a pub in what is now the constituency of my honourable friend, the member for Birmingham Ladywood, to put money into a shared fund, collecting regular subscriptions until sufficient funds were collected to be able to provide a house for one of them. They drew names, very much like the drawing of names for a private member's bill, to decide which of its members would be the next beneficiary. This continued until all members of this group had a house. This arrangement required trust, it required hope, and it required a commitment by the community that no one would be left behind. At that time, most building societies were created as terminating societies, which meant that the building society terminated trade once all of its members were housed. So many were created, housed their members, and then disappeared. This practice continued until 1980. By 1825, 50 years after the first building society was created, over 250 terminating building societies were in operation, although it took until 1845 for the first non-termination society to be formed, the Metropolitan Equitable. In 1836, the first legislation dealing with the industry was introduced, recognising building societies for the first time in this House through the regulation of benefit building societies. The legislation, along with previous court cases, had led to formally recognising the rights of building societies as entities. This resulted in a boom in the sector by 1860. The number of building societies had risen to almost 3,000. In 1874, the Building Societies Act was passed into legislation. This is an historic precursor to the Building Societies Act 1986 that my bill is hoping to amend. The history of building societies have played an important role in the history of working people, supporting each other in their mutual ambition of owning their own home, and on financial institutions serving the communities that they represent. This is a trend that is even prevalent today. As banks shut branches at an alarming rate, building societies gradually are taking a bigger share of branches in the community that remain open. Building societies now account for 28% of all branches, high street branches in the UK, as opposed to only 14% only 10 years ago. Whilst this may be caused by the closure of bank branches in the main, it shows a commitment to keep branches open by building societies that so many of my constituents rely on. That face-to-face engagement, personal support and visibility is so important to many people. These branches are so much more accessible to those who have specific needs, especially in the digital age where those with internet access often have the best opportunities and access to the best deals too. The original purpose of building societies embodies the famous phrase in Clause 4 of the Labour Party: by the strength of our common endeavour, we can achieve more than we achieve alone. Communities coming together to support each other and provide a strong and secure economic foundation for their collective futures. Families in Sunderland and across the country are struggling to find a secure home. Research by the Resolution Foundation shows that 80% of 25 to 34-year-olds would prefer to buy their own home rather than to rent. Home ownership is something many strive for, to provide that financial security and ultimately to turn a house into a home. This bill aims to support them in doing just that. As I said before, it is quite clear there is a housing crisis in this country, both for home owners and renters. And we must, at this point, I think, consider the damage done by the last Prime Minister and her Chancellor and the economic damage that was caused to the country by her government, especially to people who have mortgages. I do believe that we need to see reform in the rental sector as well to sort this out. The system is broken and is not working for people. This bill, I hope, will go some way in making housing ownership, the housing ownership landscape, easier for all. Of course.
To the Honourable Lady for giving way, and I must say I support this bill, and I know a lot of people across all parties do, and it's good to see something that hopefully will strengthen the principle of mutuality. But does she agree with me that that is an important principle to retain, and is she confident that her bill does that? And will this lead to a situation where there's less desire among building societies to become banks?
I do agree with the right honourable gentleman. I think building societies are certainly part of my life growing up. I got my first mortgage with a building society a very long time ago, because I'm getting very old. But the principle of mutuality is really, really important, and I think it does set the building societies apart from banks. They're a very different model, and I think serve communities in a much closer way than banks do. So, by introducing welcome flexibility to a sector that does so much for first-time buyers and others, whilst the bill itself does not directly provide provision for the building of homes or assure the retail customer of any extended product lines, it does provide more room for the sector to work in, given that their use of finance is different to that of banks, as they lend a significant amount of money to first-time buyers. The building society sector, which is made up of 42 separate building societies, currently has almost 26 million members, holds over £352 billion of mortgage assets, and holds £313 billion of savings from individuals. This is not a small sector, but it is a sector that can grow. The challenges building societies face are significant. I believe this bill has the potential to unlock billions of additional lending capacity for them. It is estimated that for every £10 billion of new lending capacity, the sector could support an additional 20,000 mortgages. As we know, over half of building society lending goes to first-time buyers, so the potential impact of this bill is huge. Since 2020, in the northeastern Cumbria, building societies have lent £3.4 billion to first-time buyers. In the first 9 months of last year, they supported nearly 4,000 first-time buyers. That is 4,000 people who last year started their journey of home ownership, with all the financial security and benefits that that brings. Increasing lending capacity is incredibly important in supporting hard-working people. It is essential to the UK's future prosperity and desperately needed for economic growth. I want to briefly run through the 4 clauses of this bill and the impact these changes will have. This is not a standalone bill, but it is a bill that will amend the Building Societies Act of 1986. It will insert new provisions into that Act. Clause 1 of the bill deals with funds that can be disregarded by a building society for the purpose of calculating its wholesale funding limit. At the moment, the 1986 Building Societies Act requires them to obtain at least 50% of their funding from members, that is, individual member deposits. The retention of this 50% minimum requirement ensures that the members remain the primary owners of building societies. It is what makes this sector so unique. The other 50% can come from external sources. This balance will not be changed, but there is a need for modernising the rules governing the sector, for building societies to compete with banks on a level playing field. The Prudential Regulatory Authority and the Financial Conduct Authority engaged with the sector on this issue in 2021. The conclusions of the government consultation recommended to exclude some sources of funding from building society wholesale funding limit calculation, as well as the modernisation elements that come later in the bill. The recommendations were never implemented, which is why this bill is needed today. Clause 1 disregards the following from that 50% wholesale funding limit: Bank of England liquidity insurance facilities, debt instruments raised to meet the minimum regulatory requirement for own funds, and eligible liabilities requirements, and sums received under sale and purchase agreements, with a view to complying with the Prudential Regulation Authority rules. These changes will not dilute the unique ownership model that building societies operate under. They will not increase the financial risk to the sector, because these liquidity insurance facilities, the debt instruments and the sale and repurchase agreement sums will be effective tools at a time of a national economic crisis to ensure that building societies remain comfortably solvent and active in the interests of their members. These changes will help future-proof building societies from external factors, economic shocks or periods of financial stress. The specified facilities, etc., will be described by statutory instrument laid by the government of the day, which will thereby provide additional detail to allow the funding disregards broadly described in subsection 2 to be activated. The bill is designed so that any government at any given time can react to the needs of the building society sector, the Bank of England and the Prudential Regulatory Authority. By making regulation change by means of secondary legislation, it makes this sector much more sustainable in the future and able to react to changes in circumstances. The changes presented in this bill formed part of the Edinburgh reforms, and all of the responses to the government consultation were in support of these changes. Prudent lending is crucial to the UK's economic growth. Making this change will make building societies safe, more secure and competitive in the long term, without affecting their status as mutuals. Clause 2 of the bill is about modernisation. It amends the 1986 Act to explicitly allow the option of real-time virtual member participation in building society meetings. The change presented in this bill aligns the sector with modernisations made to company law by Section 360A of the Companies Act 2006. This will allow virtual attendance and voting as part of hybrid meetings, making clear that none of the sections already present in the 1986 Act preclude this. Allowing hybrid meetings will improve accessibility and hopefully allow engagement from members who currently can't travel to take part in meetings, enabling a broader cross-section of members to participate. Clause 3 is another modernising clause, which in simple terms will enable the Treasury to introduce increased flexibility for societies in relation to common seals and on the execution of documents in line with companies. This section in the bill reserves the right for the Treasury to make provisions by regulations in the future, upon which further consultation in the sector would be usual. And finally, clause 4, not the same clause 4 I mentioned previously, defines the territorial extent of the bill, which does cover all 4 nations. It notes how the bill will come into force at the end of a period of 2 months from when it is passed, which is the standard period for legislation. The bill has no implication to public funds. This is shown in the impact assessment. It does not contain any provisions which require a money resolution or a Ways and Means resolution. Ultimately, this bill does a lot of things in a succinct way. It enables the modernisation of the building society sector and brings it up to date. It puts the sector on a more level playing field with banks and potentially allows them more scope for supporting their members or future members. The bill has overwhelming support from the sector, from the Building Societies Association, the representative body of the sector and their members. The BSA, which was founded in 1869, is now the voice of the sector, representing 42 building societies, 7 credit unions, serving 27 million members up and down the UK. The sector has helped 3.5 million people to buy a home with mortgages totalling over £375 billion. This accounts for 23% of total mortgage balances outstanding in the UK. The building societies that the BSA represents accounts for 19% of cash savings in the UK and 40% of all cash ISA balances. The sector across the country employs 51,500 people, both full-time and part-time, working in around 1,300 branches in the UK. The BSA contributed greatly to the consultation process in 2021, and I'm proud that they are supporting this bill today. I also wish to thank His Majesty's Treasury for the support they have given me in preparing for today's second reading. The impact of this bill will make building societies lend on a similar basis to banks, freeing up more money to help more working people in the UK. I believe it has the potential to unlock billions of pounds of additional lending capacity at a time when so many people need it. I commend this bill to the House.
Yeah. The question is that the bill be now read a second time. George Freeman.
Thank you, Madam Deputy Speaker. It's a huge pleasure, may I say, to be able as a backbencher to join Friday Business and to support this really important bill on behalf of my Mid-Norfolk constituency. And can I start by congratulating the Honourable Lady, the member for Sunderland Central, on bringing this bill, on winning, first of all, that first prized first place in the ballot and being able to really make a difference with this bill, and thank the government for working with her and all of us who've supported her in support of it. This is a good example of cross-party work, government working with backbenchers in the interests of our constituents and the shared and mutual interests of the citizens of this country. And I only wish more people around the country were able to see the quality of this work going on in this House on days like this. I wanted, Madam Deputy Speaker, to particularly highlight the importance of this bill for rural areas like mine. I know the Honourable Lady represents a magnificently urban constituency in Sunderland Central. I, Madam Deputy Speaker, represent a magnificently rural constituency in mid-Norfolk. 114 villages, 5 towns, the border, the boundary, which I cycled as a candidate, rather rashly promising to cycle it one Saturday morning. I then discovered was 94 miles long and took me rather more than one Saturday morning. And much of this country is indeed rural and up north as well as down south and in the southwest. And I want to particularly focus on the importance of this bill and building societies in rural areas and on the high streets of our towns, in providing cash facilities, supporting first-time buyers and pensioners with cash. And I'm particularly reference in Dereham, where recently I saw nationwide packed queues outside with people, pensioners, moving from the bank, which is closing, to support Nationwide as Nationwide supports them. And in a constituency in a part of the country where we have a huge number of retired folk who actually do want cash, they don't all want to be totally digital. They value and need that interaction of a person, a living and breathing human being, when they go to save or when they go to take out cash, and Nationwide Building Society doing great work in supporting them. And I'm really keen to support this bill, as the Honourable Lady knows, largely because of that particular rural need. I want to touch on... Yes, I'd be delighted to give way to my right honourable friend.
Thank my honourable friend for giving way. I should declare I'm a member, I think, of 3 building societies, and until recently had a mortgage with a Nationwide Building Society. I agree with my honourable friend about the importance of building societies in rural communities. I think of very local ones, Suffolk Building Society, but elsewhere around the country there are places like Newbury Building Society and similar, and it's that connection to the community that really matters. But can I say to my honourable friend, what really is important is to get on with this primary legislation, but to get the negative secondary regulations through as quickly as possible so that we can boost mortgage borrowing for families who are very keen to get onto the housing market.
Yes, I completely agree. My right honourable friend makes an excellent point, and I know we'll come to that in due course. She's absolutely right. I want to focus particularly on this issue of building societies in rural areas, on the flight of the banks from particularly rural areas, but actually a lot of high street banking and the role that they've traditionally carried out, which is partly why this bill is so important, highlight the importance of cash in the rural economy. Many of my local small businesses really struggling with how to bank cash properly, and we've also got a problem in our part of the world of ATMs now being subject to JCB thefts, ATMs being ripped out of the wall. So there's a cash problem, and I think the building societies have a really important role there. And I wanted also to highlight that as well as this reflecting the very best of old Labour, it's also, if I may say, the very best of civic conservatism. This is Edward Burke's Little Platoons. This is the weft and the warp of local, connected, responsible, civic, community-based capitalism. The sort of capitalism that small platoon civic conservatism has long championed, but I would argue all parties in government for the last 40 years have slightly forgotten that it needs championing, and we've seen a rise and a domination of big capital, big banks, big disconnected capitalism. So I'm here today as a card-carrying supporter of the mutuality model and of civic capitalism, which I think both main parties actually have in common in different traditions in their history. Madam Deputy Speaker, let me just turn to this issue of rural banking and rural finance. As I said, in mid-Norfolk we have 5 towns, 114 villages. We are not quite halfway between Cambridge and Norwich. It's an area which has traditionally been something of a rural backwater, an agricultural community, many retirees, many pensioners moving to quiet rural Norfolk, and a real challenge of how we make sure that our villages remain vibrant, our towns remain thriving, in a model of development in the last 40 years, which has been rather over-focused on commuter housing, cars, people driving to Norwich and Cambridge, and sucking the life out of, during the day, many of our villages, and indeed the rise of online commerce, the rise of digital retail, actually taking quite a lot of the life out of many of our towns, and our high streets are really struggling to remain vibrant. Now, the government's moves on reduction of business rates has helped, but the pandemic and the cost of energy crisis coming off the back of the Ukraine war has really hit rural areas disproportionately hard, and it's a theme I'll be picking up in the coming months in this House in the run-up to the budget. Everyone's been hit by the cost of energy increase, of course, but in rural areas you get a double, triple whammy. Every member of staff in your company has to drive. Most of my relatively low-paid working families have got 1 or 2 or 3 cars, not as a luxury. They're not. They do it because they have to have that in order to get to work. All of our public services are hit. Our bus services are hit. Our county councils hit. All across rural areas, we're paying a double whammy because of the over-dependency on transport, on heating. So there's a huge rural impact, and that is hitting rural areas, particularly in my part of Norfolk, in those sort of backwater remote areas, very hard. And it's in that context that it is really urgent that we encourage the revival of the rural economy. And I've long believed and campaigned locally that with a slightly different approach to planning and development in our area, we could actually trigger something of a rural renaissance, with many small businesses popping up off the backs of the Cambridge phenomenon, the Norwich Research Park. Small businesses often working from home, starting from home, or looking for converted farm units. Small businesses that are not in the city centre, they're distributed. And if we can get more businesses back in villages and back in small towns, we'll get more people of working age in those communities during the day. We reduce congestion, we reduce commuting. And that model of a vibrant rural economy is completely key to so many of the priorities of successive governments. We'll never get to net zero if we keep shoveling people into cars and making them to commute long distance in congested traffic jams. The more we can get people to work from home, work nearer from home, and travel when they need to during the day, not in peak hours. So this vision of rural renaissance, I think, is completely key. But it'll never happen if we're not able to have young people able to afford to buy a house in and near where they work. If we're not able to have thriving businesses on the high streets that are able to cash up, save and deposit cash safely, if we're not able to have pensioners who are able to save and able to go and actually take out their deposits and interact with banking in the way that for 50, 60 years they used to. We need to make sure that we're building an economy that works for the people who actually live there. And that's what my campaign, The Norfolk Way, is all about. It's a project to promote that vision of rural growth. So I think this bill touches on much of that, and one only has to see, and I know colleagues in other constituencies see this, you only have to see the flight of the mainstream banks out of areas like this, the desperation of people, whether first-time buyers or pensioners, for that. I'll happily give way to my friend.
I think he's making an excellent speech, but in my constituency, we shouldn't see building societies as some panacea. They are closing branches in my area as well. And I just wonder, as part of this, how do we encourage building societies to keep those branches open, which are closing throughout the country?
No, my honourable friend is right. He makes an excellent point, and I don't want to suggest they are the total panacea. I'm lauding and applauding Nationwide in Durham because they're doing great work, but we need to make sure this bill is part of a broader approach, I think, and I hope Treasury ministers thinking about the run-up to the budget and looking ahead will think about how we can encourage more choice, competition, and more presence of both building societies and indeed banks. We need choice and we need competition in rural areas, in areas that are not well served as well as in those that are. And Madam Deputy Speaker, in this area, this opportunity of rural renaissance has been really hit hard by the pandemic, really hit hard by the Ukraine war impact on energy prices and Putin turning off the gas taps and the cost of living crisis that we've all experienced. And it is in that context, I think, that this bill represents a chink of light and has been hugely supported locally, and I'm delighted to have helped the Honourable Lady to bring it here to this House. I want to say something, if I may, about the banks, because over the 13 years I've been privileged to be the Member of Parliament for Mid-Norfolk, the gradual closure of banks in rural Norfolk, a cause that I remember fondly back in 2009, working with the former Prime Minister and member for South West Norfolk on, back in the day, before she became Prime Minister, is something that has really slowly hit much of rural areas in Norfolk. And I think it is worth just remembering that, you know, those banks, of course everyone understands you can't have a hugely staffed branch bank in every village. But there is a contract at the heart of the state between citizens, government and operations like banks that work under regulations. And banks are there to provide a service as well. And if they're not going to provide that service, then I think we do need to look at, well, who is going to provide it? And I hope, to the point that my right honourable... Yes, of course.
Grateful to my right honourable friend for giving way. Does he agree with me that it's understandable that with the number of people who are going into banks to do their business these days, it's not unreasonable that there should be some sort of restructuring? But I think the idea of banking hubs where all the banks, all the main banks, club together to ensure there's a proper facility in a town or a substantial village is a very good idea. And don't you think it's important that they should take in cash and takings from the small businesses, because they don't all do that?
I do. My right honourable friend amplifies exactly the point I was making. He's right, and we need, in areas sparsely populated or rural areas, will require often different solutions. And in the same way that small rural schools require us to network and support them through multi-academy trusts, similarly, we need to be imaginative in thinking about how we support cash access and banking and saving in rural areas. And I think this touches on a sort of deep problem I've witnessed over many years, that Whitehall tends to see these problems through an urban lens. And we do need to just think a bit about how rural areas often need a slightly different approach. So I hope that this bill will also help, and the response to it, the cross-party support to it, will help encourage the Treasury to think about how we can do more and make this a moment to encourage greater choice and competition out in the market. It is particularly sad, I think, that the banks have stepped back from this during 2 or 3 decades in which we've seen many of these banks focus rather more on the big international complex financial trading, the derivatives, which of course led to quite a lot of the problems we had back in the Great Crash. And it's particularly sad in Norfolk, given this is where one of our great banks, Barclays, actually started. And the Gurney and the Barclay families, it started originally, Madam Deputy Speaker, the first bank had its roots at King's Lynn Docks, where, as people were required to pay duties, they required credit finance. And there's a very nice plaque. If any of you have not been, please, I'd encourage you to go to King's Lynn, a beautifully regenerated and refurbished Georgian dockyard, and you can see there the plaque to the first credit facility that became the great Barclays Bank. And it's particularly sad, I think, to see a bank like Barclays step back from the place in which it originally started. And everyone has history and roots and heritage, and I'm not such a romantic that I expect Barclays to put a bank in every single Norfolk village, but I do think there's a responsibility on all of these companies to just make sure that the people who in the end they're there to serve are actually getting the service that they need. I want to particularly highlight the importance of this cash access issue on high streets for small businesses. It's becoming a really serious problem, and I know the Minister understands it, and I'm grateful for his acknowledgement of it. And I know that across East Anglia, and I'm sure it's happening elsewhere, we're seeing increasing frequency of ATM raids, JCBs driving into banks and taking ATMs out, but that's the thin end of a bigger wedge. And many businesses in Dereham, in Attleborough, in Wymondham, in Watton, in Hingham, are really beginning to struggle with what to do with cash on a Monday morning, and many people locally struggling to find a bank they can actually access. I know there are many people who want to speak this morning, Madam Deputy Speaker, so I won't detain you or the House for too long, but I did want to touch on this issue of mutuality, and my right honourable friend, the member for Hertfordshire North East, touched on it earlier, and I think it's something that we need to, in this House, talk about more, celebrate more, champion and promote more. And the truth is, this company, back when we were 300 years ago writing the rule book for modern capitalism, when we were defining the joint stock limited company, when we were setting out that legal framework in English constitutional law, in common law, that drove the Industrial Revolution, we created those limited liability companies that allowed people to invest, to raise money, to back projects. That was a key part of what this country did. I would suggest that in an age of globalised capitalism, high technology, we have a challenge as well to make sure that capital doesn't become so disconnected from the people who are providing the money, the savers, and the people who are needing the money to build businesses. For capitalism to work, you need a connection between money and the people who are saving it and the people who are borrowing it. And the last crash in the city was a very clear example of what happens when that disconnection is allowed to get to crisis proportions. When people don't know where their money that they've deposited is going, and when people who buy a complex derivative bond don't actually know what it's built on or what is actually underpinning it, you have a serious problem. Now, I'm not suggesting we go back to an agrarian revolution of trading wheat for a lift on a cart into Dereham, but I do think there is a real issue in our economy of connected capitalism, and that we, particularly perhaps on this side of the House, as card-carrying advocates for the market, do need to continue to champion and make clear that markets work when they have values, when they have connection, when they have people at the heart of them. Markets that are completely disconnected, that have no sense of the requirements of the people putting the capital in or taking the capital out. Markets that don't value that connection. Regulators that don't understand the importance in the end of the bond of responsibility between people who are trading with each other. I would argue this is both a proud tradition at the heart of the old Labour movement, but it's also a proud tradition in civic conservatism. This is Burke's Little Platoons. And in a spirit of joint party philosophising on this Friday morning, Madam Deputy Speaker, perhaps I can put some wind in the sails of the movement for mutuality. And I think we could see, I'd love to see more mutuality in different sectors. Yes, in finance, in banking, in housing. Clearly, the building societies have been a great reform. I would argue, actually, the housing associations have been a great conservative reform in housing. But there are many examples of mutuality that I think we could blow onto the embers of mutuality and encourage more in different areas. And particularly in some of our social care sectors, in some of our health provision, it shouldn't be a stark choice between private, profit, public, state. There's a whole third sector of mutuality, of membership organisations that can deliver public goods with cost reimbursement and important disciplines of financial control that aren't necessarily either public sector with all of the challenges that go with efficiency, or private sector with all the incentives for high profit. There's a whole raft of organisations out there that we could be deploying, I think, rather better in both health and care, but also in criminal justice, in a whole range of areas where the state has struggled in the last few decades to achieve its stated objectives. Yes, of course.
I think he's making an outstanding speech, and we could philosophise here all day, which I'm tempted to do very badly. But mutuality in the modern day requires a profit element. For the branches to remain open for the building societies, the business has to produce a profit. Mutuality in the sense of Ketley's Bank in 1775 is a different concept completely. And therefore we should always come back to the point that he's making. For mutuality to succeed, it is based upon a civic, conservative, capitalist model. It cannot work in any other way.
Yeah, my old friend makes an excellent point and encourages me to wrap up my philosophising. He's right. I'm not at all anti-profit. It's what you do with the profit. And I think one of the geniuses of mutuality is that the profit is recycled back in to pursue the interests of those who put the capital in the first place. I'll happily give way.
Well, I'm very grateful to him, and I mustn't keep trespassing because I've got a bill. But does my right honourable friend agree with me that if you look at pension funds and the possibilities of extending that sort of approach into social care, that there's a lot in this idea of mutuality, and also the point about a profit. If those funds are invested in national goods, important national infrastructure, things of that sort, we can all benefit, but of course it has a financial aspect to it as well.
Well, my right honourable friend again makes the point even more eloquently than I was trying to do, Madam Deputy Speaker. He's right, and I think I make this point in all seriousness, that actually in so many of the areas, in infrastructure, as he says, I dream of a world in which people can put their own savings into mutual vehicles. I'd love people to be able to invest in the Cambridge-Norwich Railway Development Corporation, to fund the regeneration of those neglected stations, to create and fund investment vehicles. There's a whole wealth of instruments, vehicles, bodies that are rooted in that very fertile period of 18th and 19th century English capitalism. Scottish capitalism too, actually, to be fair. The Enlightenment in Edinburgh had a big part of this, and I think there is something we could do to draw on these models better in pursuit of many of our public sector objectives. So, Madam Deputy Speaker, as I wrap up, let me return to the more mundane and practical issues. This is a really important bill, I think, for both updating the law, for giving building societies a chance to get back to where they were back in the early 90s. They were responsible for something like 60% of the market. They've dropped down to 20%. So to help building societies compete and to get back and able to provide that core service, to help those who want to save in building societies, not banks, those who need those first-time buyers, those, particularly in my part of the world in Norfolk, who haven't got high salaries, are looking for a very safe, very reliable local building society that can help them acquire, hopefully, a local house built for them rather than for commuters who are moving into Norfolk. We need to think about the people who are actually driving public services and the rural economy. So for the first-time buyers, this is a really important measure. And as the Honourable Lady said in introducing the bill, increasing lending capacity is in itself a huge step forward. And I think the figure is 10 billion of extra lending capacity will benefit 20,000, will allow the provision of another 20,000 mortgages, and particularly for first-time buyers, that is hugely important. So can I conclude, Madam Deputy Speaker, by genuinely congratulating and thanking the Honourable Lady for Sunderland Central in bringing this forward, the government in working with her and us on it, and all those who've helped. And I think this bill strikes a small but very important blow and sends a key signal that building societies are back. We want to support them, and we want to help that as part of a broader commitment to civic, small, local, platoon, connected capital that can help people in the communities up and down this country save and withdraw money in the way they need to support the local economies on which the national economy is built.
Gideon.
Thank you, Madam Deputy Speaker. First of all, I must congratulate the Honourable Lady, the member for Sunderland Central, on bringing this bill forward. It's really important, and as has been said, she has the support across the House. I also am slightly in trepidation following my honourable friend, the member for Mid-Norfolk, because he has taken the debates in such a wide context, which I mean I also intended to do and still intend to do, but from an urban and maybe a community banking perspective. But what he says is absolutely right, that civic activity and community-based financial services are something that I believe that this bill actually goes a little way towards triggering by bringing about a level playing field for building societies with banks so they compete more fairly. This bill will, I think, support building societies to do more lending in a safe and secure way, and it's welcomed by many, as the Honourable Lady said, including the Building Societies Association. It's a great starting point, but the economic landscape continues to change, and building societies need the opportunity to remain competitive, and so secondary legislation will be required to ensure that changes to regulations for other financial service providers are matched by updating the framework for building societies. The government consulted on similar changes during 2022, and this bill largely mirrors proposals from the consultation, which were welcomed by the industry. There are some, I think, that quite modest but fundamental changes, and these are really important. Building societies were founded to help working people own a home of their own, and their mutual status means that their sole purpose is to serve their customers. They direct a greater proportion of their lending to first-time buyers than banks do, but they're constrained by archaic legislation, unfit for today's economy. Without this small but important piece of legislation, the competitive playing field in lending is not as level as it could or should be. Under the Building Societies Act 1986, building societies are subject to funding limits that their high street banking competitors are not. These limits require at least half of their funding to come from savings deposits made by retail savers. In areas such as Stoke-on-Trent, the average savings and the number of savers are lower than in more affluent areas, and consequently this means that smaller local building societies are restricted in the numbers of mortgages they can offer, even though these are needed. The proposed changes to the Act won't alter the funding limit, but will remove certain key, as the Honourable Lady's outlined, certain key impediments, enabling building societies to lend more and ensure more mortgage loans are available to UK home buyers at competitive rates and, crucially, to the lifeblood of the housing market, first-time buyers, as well as those further up the ladder. Indeed, this bill seeks to unlock billions of pounds of extra lending for first-time buyers and homeowners. It's estimated that for every 10 billion of new lending capacity, there is potential to support an additional 20,000 average first-time buyers through these changes. Risk needs to be managed, but smaller building societies in particular shouldn't be tarred with the same brush as high street banks. Regulation needs to be simplified and made easier for them, since within their customer base they cater for a group of people who are on the edge of mainstream banking. If local building societies did not exist, some people will be entirely disenfranchised by banking. Their mission is a social one as much as a financial one. The banking sector has essentially become a risk management business. As building societies grow, they manage more risk, and the regulators aren't keen to take this on. However, while the inertia this creates is understandable, it makes it incredibly difficult to change the system. One issue in particular that I've been campaigning on for some time is the one-size-fits-all regulation that burdens smaller lenders and stifles innovation in the banking and non-banking financial sector. The Netflix movie telling the story of Dave Fishwick's journey to try and open a community bank in Burnley, the Bank of Dave, hit the top 10 in America in 4 days after its release. It captured the imagination of the British public last year. Dave's innovative ideas make sense to the nation. However, the existing regulatory framework doesn't seem to be able to adapt and respond to this. I've been working with Dave Fishwick and with forward-thinking organisations in the financial services sector to push for a simpler regulatory framework and to enable a model that can provide the template for creating community banks across the country. And we don't have enough regional banks or banking in communities where people are serving, the banks and facilities like building societies are serving local people and understand their needs. People don't want to be faced by a computer that simply says no. If anywhere needs a healthy local banking system with local people being included, it's Stoke-on-Trent as well as Norfolk, of course. With small businesses being able to access loans and home buyers and mortgages from people who understand the people that they're serving and whose bottom line is actually helping their community rather than maximum profit. In our quest for economic growth, we know that the biggest growth sector is small businesses, which represent over 95% of all business. Yet high street banks aren't lending to them because they represent the highest risk levels. But many small businesses need to borrow to grow, and the current options are not adequate. So let's enable the smaller challenger banks and CDFIs to flourish and make it easier for building societies to lend more to first-time buyers. I think building societies offer a huge opportunity. They are communities paying for the community, which matters hugely in places like Stoke-on-Trent, where there is a great sense of place and pride and people wanting to help each other. Building societies can offer more to the community than high street banks because they have a social mission. I was speaking recently to Hanley Economic Building Society in my constituency, and they shared their plan to use funds from dormant accounts to invest in local projects. They still protect the dormant account holder 100%, but in the meantime want to use their business to make a difference in Stoke-on-Trent. And it makes sense. It is using local people's money to invest in local projects. Modernising the legislation around building societies is long overdue. Building societies were founded to help working people own a home of their own and are an essential part of our communities. In order to be sustainable, a building society needs to be allowed to grow, at least at the pace of the rest of the sector. And in order to do that, they need to lend. And without the retail funding that this bill would allow, they can't do so effectively. Other sectors, whether that be mutuals or friendly societies, have had similar updates to bring their regulation in line with competition in the sector. So this is a crucial opportunity for building societies to enable the same. This bill is an important starting point which needs primary legislation. But as the economic landscape changes, building societies need the opportunity to remain competitive, and secondary legislation will be necessary to ensure the legal framework is up to date. And this includes tidying up anomalies in the 1986 Act. One piece of legal housekeeping long overdue is to make the director's retirement age provisions in the Act explicitly consistent with the Equalities Act of 2010. Section 68 of the Building Societies Act 1986 states that the normal retirement age for a director of a building society is 70. There used to be a retirement age set in the Companies Act for PLCs, but following the Equality Act 2010, which outlawed age discrimination, those provisions were deleted from the Companies Act. But the statutory normal retirement age has not been removed by the 1986 Act. This may seem like a silly example, but at present it means that there are two contradictory statutory provisions. It would be much better if the retirement age provisions of the 1986 Act were removed, as has happened for PLCs. Simply because a director has just reached their 70th birthday, and I feel this quite personally, does not mean that they are no longer competent. They have huge amounts of experience, they understand the market, and firing them would be demonstrably wrong for the business. The bill will support building societies to better weather periods of financial stress in the future and will help minimise risk in the banking sector. Building societies have around 1,300 branches, but as we heard earlier, this has gone down by about a fifth compared with 2015. The number of bank branches has declined even faster, more than halving since 2015. So there really is a need for more locally based lending in communities across the country, as well as more encouragement of savings that stay in the community for supporting lending. These changes will help to level up the playing field for building societies to compete more fairly with banks and will support them to do more lending. Crucially, as the building society sector directs a greater proportion of lending to first-time buyers versus banks, this will benefit more people getting onto the housing ladder. And increasing lending is essential to UK's future prosperity and economic growth. And in 2021, the Bank of England launched a project called A Strong and Simple Prudential Framework for Non-Systemic Banks and Building Societies, which was supposed to simplify, it basically goes to the heart of what I was saying about smaller building societies and smaller banks and lending institutions spend far too much of their time having to comply with regulations that were written for high street banks and very, very large global billion-pound-dollar businesses. And simply by making it less onerous on them, they could innovate more, they could proliferate across the country. Published by the Prudential Regulation Authority, it set out a vision to simplify prudential requirements for smaller, domestic-focused banks and building societies, whilst maintaining those firms' resilience. The invitation to comment seems to have met with resistance from the risk-averse industry, which is, I think, based on penalising the minnows whilst protecting the giants. So inertia reigns and progress is slow. So it is my hope that small changes such as being brought forward today to make for fairer competition will be the forerunner of larger reforms, such as a new framework for small domestic deposit takers, which will enable the financial services sector to embrace change for the benefit of the most marginalised and underserved communities and businesses.
Natalie Elphicke.
Thank you, Madam Deputy Speaker. I'm very pleased to follow my honourable friend for Stoke-on-Trent Central. I think she has made an excellent case for the importance of both the local aspect of building societies, but also how they help people in her community, deprived communities, people who need to get on the housing ladder. And I thank her for her contribution. And I congratulate the Honourable Member for Sunderland Central for her good fortune in securing the top slot in the Public Members' Bill ballot. This is like winning the lottery for us parliamentarians on the backbenches, and her choice in today's Building Societies Amendments Bill is a real tribute to the seriousness with which she has taken that fortune and that responsibility, and I thank her for that, because this is an amendment bill that is important to my constituents in Dover and Deal in the villages and will make an impact on the whole country. It really matters. So I strongly welcome the intent of this bill to begin to level the playing field between banks and building societies by updating the funding rules for building societies. This will enable them, as we've heard, to raise additional capital. It will open up competition for the benefit of customers in the mortgage and savings markets, while retaining that critical mutual model without reducing financial stability. It will also modernise arrangements for meetings and the execution of deeds. I'm a proud member of a building society, the Principality Building Society. I served for 6 years as a main board director on Principality, and I chaired the Group Risk Committee. I have a great passion for the importance of mutuals in general and building societies in particular. We have heard of other mutuals and other not-for-profit organisations like the housing associations, and I agree with the comments of my honourable friend for Mid-Norfolk that these are absolutely vitally important in having purpose, as well as bringing forward funding and taking forward other actions. But in relation to my time at Principality, I faced an annual re-election to the board every single year at the annual general meeting, as did every other board member, including the chief executive. And every year now, as a member of the Building Society, if I'm unable to attend the AGM in person, I can vote electronically. And that annual act of receiving and responding to the AGM papers, it connects me directly and personally to my building society. I enjoy looking at the papers. I enjoy considering the performance and the objectives of the society and reading about the current board members. And so I turn first to the proposals in the bill to allow members to attend and speak at AGMs remotely, as well as to vote. The use of hybrid and indeed virtual-only meetings has become more common since COVID. It will be important, as this bill moves forward, to consider how such a decision for hybrid arrangements will be made, and indeed who will make it. For example, will there be a consultation of existing members? Would it be a sole decision of the Chief Executive, or perhaps a decision for the whole board? It will be important to ensure that in the decision to proceed with such virtual arrangements, that this does not diminish effective participation or is not made for other reasons, such as simply to cut costs or to hold an AGM somewhere where it is more difficult for members to get to on the basis that there is a virtual capacity to participate. And this particularly matters because, as we in this House have recognised, there is a special value in physical attendance. It is to be noted that in relation to this chamber, it is perfectly possible to have virtual debating, virtual questioning of ministers, and even virtual voting, and all those things happened during COVID. Now, we meet in person. We debate in person. We question in person. And over many hours and often late into the evening, we vote in person. Although often considered, modernisation in this place has been, further modernisation in this place, I should say, has been currently rejected. Although there may be many members who share the view that more could be done in order to modernise Parliament further. But it must be noted that there are particular benefits of being together in one place, and that carries much weight here. And I want to just reflect on that in this context. Because we've also recently voted not to allow council meetings to be held with virtual participation in respect of Lord's Amendment 22B to the Levelling Up and Regeneration Bill. And the basis for the government's position on that was set out by Earl Howe in their Lordship's House to include the need for councillors to interact with citizens and to be held accountable to them. When I was a board member at Principality, I was indeed subject to the scrutiny of those members who attended the AGM and the interaction and engagement that comes with that. And I have to say, as a board member, I really absolutely enjoyed and look forward to those AGMs. The Principality AGM was well organised and well attended. Year after year, members would come and they would chat and they would have a cup of tea with the board directors, and that was really important. And I remember one of my regulars, Mrs. Jones, who would come along with Mr. Jones, who said rather less. And Mrs. Jones would invariably take me to task on the rate of interest for savings and why couldn't it be higher. The members would comment on the financial performance and savings rate, and many took a huge interest and pride in the purpose and passion of the Building Society, be that the commitment to first-time buyers or to building homes. For Principality became the first building society in recent times to put the build back into building society. These are the very roots of the building societies, to build homes for home ownership. At Principality, I championed this renaissance and the Ely Mill development in Cardiff, creating quality affordable homes and hundreds of new jobs on a brownfield industrial site in Cardiff, in a project led by Principality Commercial and the Welsh Government. It was a first of its kind, and it led the way for other building societies to consider how they could reconnect with their house building roots. It was also an exemplar in how to remediate brownfield land in a way that can capture value and improve viability for development. And it showed again that community purpose, that focus and interest that is brought forward by being a building society rooted, embedded, committed to your community, can make that difference. So I know firsthand that the discussions and feedback at an AGM are every bit as important for an effective board as we might have when meeting our constituents, or indeed in the lobbies and corridors of Parliament itself. So while the provision to allow hybrid AGMs is a welcome step forward, we should not ignore that caution or concern that can be about ensuring that such changes improve and do not detract from engagement. All the more so because while companies are already doing this, a building society is not just another form of a company. It is something very special and very different. That difference meaning engagement, connection, participation with members. That is at the heart, the very DNA of what it means to be a building society. Now, turning to the experience of companies, this experience has not always been to the benefit of shareholder participation. Indeed, in 2022, the Financial Reporting Council issued guidance for best practice in remote corporate meetings, with a particular focus on annual general meetings. This guidance provides some helpful insights into the sort of issues which may be beneficial to securing effective hybrid participation, including making sure that virtual moderation is transparent, any character entry limits for questions is reasonable, and that there's a fair representation in questions that are asked from someone participating virtually to someone who is there in person. And it will be important for building societies to consider, if they choose to exercise this virtual opportunity, to do so in line with similar best practice and their core values. They must never miss the wisdom and the accountability that comes from building society members like Mrs. Jones. So turning briefly to Clause 3, the execution of documents. This is a long overdue amendment to align the execution of documents for building societies with those of companies, and this will be heartily welcomed by company secretaries and lawyers alike. As a former transactional lawyer in banking and finance, I have to say that making sure that the right authorities are in place, the right people under those authorities sign the documents, and the documents are completed in the right way could not be more important. They are not legal unless that happens. So as we consign these heavy seals to legal history, I look forward to them re-emerging in their new life as doorstops and bookends. And so let me turn to Clause 1 and funding structures of building societies. Building societies support a great number of our constituents. As we have heard, there are around 26 million customers of the 42 building societies who are ably represented by the Building Societies Association. Some of those building societies are large. They are very familiar household names, such as Nationwide. Some are less well known nationally, but many have geographical names: the Leeds, the Coventry, the Principality, the West Bromwich, and many others. This local aspect is key to understanding what makes building societies so special. They are not just mutual. They are rooted firmly in communities and for communities. The funding structure with which they began, which has evolved and which further evolution we are debating today, was not as a bank. And the description of that history of the building society has been set out very fully and very ably by the Honourable Lady for Sunderland Central. The clue is, of course, in the name, a building society. The building societies were clubs of ordinary people who came together for a purpose, to get a home of their own. What an extraordinary and wonderful purpose. How very relevant today it is as it ever was. The whole house knows we are not building enough homes, and that the rental market is in dire need of urgent reform and indeed of reduction in favour of home ownership and affordable rented housing. Surely we must be due for a revival of cooperative, mutual housing delivery, which promotes and enables the funding and building of homes, just like those early building societies. And this may be something which can be considered further in committee. This is a bill that has secured cross-party support, and in that spirit, I would like to echo the words of the first Labour Prime Minister, Ramsay MacDonald. He said, "No movement of cooperative self-help is more worth of support than that of the building societies. A house should be an expression of personality, and whenever it is possible, it ought to be owned and not merely rented. Would that every workman could own his own home, just as he owns his own clothes." Now, those are words that resonate through the decades. And as we've heard, it is also on this side of the House that there has been long-standing commitment to mutuality. The Conservative Prime Minister, Mr Stanley Baldwin, wrote of the expansion of the Building Societies movement and the Chamberlain Act that councils should use their powers of cooperation enabled by that Chamberlain Act to work with building societies. Imagine local authorities working closely with building societies to deliver those homes for their local people. He wrote, "They afford abundant evidence of the growing popularity of the building society as a medium for the investment of savings and the success which has been achieved in the encouragement of thrift and independence, which was one of the main objectives of the founders of the movement. These figures indicate a steady increase in the number of those who are becoming owners of their own homes." Mr Baldwin went on, "The work and aims of the building societies will commend themselves to all thinking people." How right he was. And looking today at this bill, those purposive elements of access to home ownership for working people to have a home of their own, to the public and private benefits of savings, thrift and independence, are ones we should have firmly in front of our mind, because they are as relevant today as they ever were. And there are a need for solutions to those for ordinary working people as much as they ever were. And linking savings and home ownership is so important. And indeed, I was pleased to have the support of my friend and now chair of the Treasury Select Committee, the Honourable Member for West Worcestershire, in my work to promote a building society, ISA, during my time in Principality. That became the Help to Buy ISA, to make that link between savings and home ownership through a government-backed housing deposit savings scheme. But while the building societies themselves strive to maintain a distinct and clear purpose and function, the current regulatory and legal framework does put the building societies at a disadvantage to the dominantly financial purposes of the banks. And whilst today we were looking at what this bill will do to address that disadvantage, to level the playing field, I would also encourage members to consider how they themselves might lead the way. Because in Dover and Deal, we have a proud tradition of MPs and mayors being directly involved in the building society movement. For example, the Mayor of Dover, William Clark, set up the Dover Investment and Mutual Building Society, a terminating society, one of those early forms of building society which we heard about earlier. And it was a Member of Parliament, Sir Brooke Bridges, who headed the Dover Cottage Building and Improvement Society based in Buckland in Dover. And local businesses and local people have been involved throughout the history of the movement within Dover and East Kent. In 1846, the Dover and East Kent Building Society, the Dover Investment and Mutual Building Society, which felt that it was in competition to it, so there was much rivalry at one point between different organisations. And then we saw these develop as the movement developed into, in 1850, the Dover Permanent Benefit Society, which took in the Dover Cottage Building and Improvement Society, which Sir Brooke Bridges MP had set up some years before. And so the list goes on of active engagement, active leadership, active participation in creating, leading and delivering mutual models based, embedded in communities they represent. And all of us as members and those who are in local governance roles have that opportunity to lead, to establish and show the way. And there is an excellent history of those building societies in the Dover Historian, which has been produced by local historian Lorraine Senecal, which I very much commend for an excellent insight to the development and role of people and places for the benefit of housing people. So moving to today's changes in relation to tackling the level playing field. It is the case that the banking market dominates the mortgage markets, but that was not always the case. As recently as the early 1980s, building societies held the dominant hold on the mortgage market. Liberalisation of the banking markets during the 1980s created this massive change in participation by the banks in the mortgage market, and it did increase mortgage fund availability. But now it is the case that a small number of players dominate the market. For example, Lloyds Banking Group is the biggest mortgage lender by outstanding balances in 2022. And it has 19% market share of mortgages. 19%. So that is nearly 1 in 5 of all mortgages out across the country. The net effect of the changes was a near reversal of the position of dominance of the building societies, and it was as a result of the financial markets liberalisations and changes in legislation and regulation. And that is to the detriment of competition, price and availability of mortgages for customers. Now, this bill will go some way to level the playing field for building societies compared to banks, but there is more to do. Let's take a responsibly run financial entity like Principality with its approval for running its own risk internal ratings basis. That means that it's able to use its internal models to determine the risk weight assets. That means they can decide on the basis of these highly technical professional models how much capital they need to cover their risk. They can do this, they do not need to follow the standard one-size-fits-all for other organisations. And this is a tough regulatory hurdle which requires detailed and extensive engagement with the Prudential Regulation Authority and indeed the Bank of England. And I can say firsthand that it is a tough threshold requiring forensic and detailed work, because I made it one of my key priorities to help secure that approval when I chaired the Group Risk Committee at Principality. And it is taken very seriously, and only responsibly run financial entities with very good technical risk management are allowed to do that. So compare that to some banks like Metro Bank, which has been a failing bank due to poor financial controls and inadequate systems, including a serious accounting scandal. Time and again, Metro's been on the financial brink. So no wonder it has been rejected for its IRB approval. For too long, successive governments have not backed our established, responsible building sector movement and instead have favoured failing or second-rate challenger banks. This is a matter which I hope will be explored further in committee, but I also hope that the Minister may reflect further upon. So turning to deposit funding, the context of Clause 1 of the bill is that building societies must fund 50% of the society's funds from customer deposits, in other words, from customers' savings accounts. As we've heard, this bill does not change the percentage, but it does propose to change the calculation for 3 funding types. This will enable building societies to go further towards that 50% threshold than they currently can. It will give them greater flexibility. It will allow them to manage their funding streams, price, availability of products better in the customer interests and in the interests of competition. However, the current dominant deposit funding approach, customer savings, that applies for building societies does still put the building societies at a disadvantage to banks in other ways which are not fully taken into account. For example, the Financial Services Compensation Scheme operates on the basis of size of the deposits rather than size of the risk. And that disadvantages building society because they are financed largely by their deposits, while the banks are largely financed by their wholesale markets. So the building societies will have more deposits and therefore will have a larger amount of deposits with regard to their overall liabilities under the scheme. So alongside these amendments today, I hope that the Bill Committee may consider the operation of the FSCS to level the playing field with building societies, including increasing the deposit protection amount to £100,000 up from £85,000 to capture more accounts, given the particular role that building societies have in having savers, to provide better and separate protection for small and medium-sized businesses, which should be funded by those who provide SME banking services, and for faster access for customers in getting hold of their compensation when there's a failure, by funding this from the Bank of England, with the recovery then to follow either from the failed entity or, if then necessary, the FSCS levies. Finally, to comment on the three proposed funding limits, which the three proposed funding exceptions to the funding limit which we are addressing today. These will enable building societies to raise additional capital and open up the competition for the benefit of customers in the mortgage and savings market while retaining their mutual model and without reducing financial stability. The first change is to exclude the Bank of England's support funds from the funding limits. These funds are made available precisely for the purposes of managing financial stress events. They should not artificially dilute the calculation of savings ratios which are held by the building society. And the amendment today will address that issue. The third exception is to end the current double counting of sale and purchase agreements, which support greater liquidity in challenging markets. This means that building societies will be able to better test and manage liquidity in a situation where there is a market event to which they will apply the sale and purchase agreement of assets. And the second of the exceptions is to exclude financial instruments which are structured to act as a form of equity for regulated capital purposes, including under the latest capital rules, the core capital deferred shares, or CCDS, which are a form of common equity tier 1. Put simply, it's a form of capital raising which is entirely consistent with the mutual ethos, and it strengthens rather than dilutes the regulatory core equity limits required for financial stability. It brings in more capital to the building society to enable them to do more for customers. There is undoubtedly more scope for permanent mutual shares and bonds to bring significant long-term investment into building societies, housing and other assets. This has happened in some other countries, for example, in Australia and elsewhere. While the Treasury has, I understand, assessed that these three changes overall in relation to capital raising may be modest, they should not be, because there is an opportunity for a significant expansion of the mutual funding structures, and this is something I hope may be considered further in committee, including further steps to level the playing field and introduce effective competition from well-run and well-capitalised building societies. Madam Deputy Speaker, I'm grateful to the Honourable Member for Sunderland Central for bringing forward this bill, which I strongly support. As the Honourable Lady has said, it has the support of Government, the Building and Societies Association, the sector and its members. It will be helpful. I'd be very pleased to support her work in committee if that would be helpful to her. Thank you.
Nicola Richards.
Thank you, Madam Deputy Speaker. I'd like to extend my thanks to the Honourable Member for Sunderland Central for bringing this bill before the House, and it's an honour to follow my honourable friend, the member for Dover, who made a number of excellent points. Across the country, building societies have a fascinating tale to tell about how they've become part of the social and economic fabric of the area. In my own constituency of West Bromwich East, we have the headquarters of the West Brom, as it's now known, but myself and my constituents still refer to it as the West Bromwich Building Society, and I must declare an interest, as since I was a child, I've had, like many of my constituents, a savings account with them, and I still have that little purple book. The West Brom was originally called the Cooperative Steelworkers Society of West Bromwich. It was founded on St George's Day in 1849 by 20 local citizens who appealed for people to avail themselves of the advantages of the society and thereby become their own landlords. The initial gathering of founding members took place at the former Paradise Street Methodist Chapel in West Bromwich, marking the establishment of one of the earliest building societies of its kind. It comes as absolutely no surprise to me at all that the people of West Bromwich East, just like those in the wider Black Country, have a strong history of being innovative and respecting hard work, independence and thrift. The Society aimed to enable its members to acquire property by the fruits of their own honest industry and frugality from a common fund raised by members' contributions paid fortnightly, together with a facility to provide the safe deposit of money in large or small sums as either temporary or permanent investments. Over the years, the West Brom continued to grow and flourish amid periods of economic prosperity and rising demand for housing in the Black Country. It's worthy of mention that in 1881, a time when there were only 946 building societies across England and Wales, boasting an average membership of 330 and receipts totalling just over £17,000, the West Brom stood out with over 2,500 members and an income exceeding £60,000. In 1923, Prime Minister Neville Chamberlain introduced the Housing Act of 1923. This act incentivised the private sector to engage in extensive construction of housing, which was desperately needed. As a result, the town of West Bromwich, unlike its neighbouring areas, experienced relatively lower rates of unemployment during the Depression, leading to strong support for building societies like the West Bromwich. The West Bromwich has always been seen as one of the best managed and most successful societies. Its reputation for prudent lending and sound management enabled it to grow and consolidate its position during World War II and the post-war years, as well as to weather the storms of the early 1990s recession and property market slump. Since its establishment, the West Bromwich Building Society has undergone several relocations on West Bromwich High Street, before settling into its purpose-built headquarters at Providence Place in West Bromwich in 2016. One of my first constituency visits I made after I was elected to this place in 2019 was to visit the West Brom, where I was delighted to meet Chief Executive Jonathan Westhoff and learn about their enduring focus as a traditional building society. A building society which provides a secure haven for their savers' funds and enables individuals to achieve the ultimate goal of home ownership. As a mutual entity, these principles have guided the West Brom since its inception in 1849. Like all building societies, the principal motivation behind every decision and every course of action that the West Brom takes has been the well-being of its members. Through initiatives like the Community Grant Scheme and dedicated funding, the West Brom has significantly contributed to our local communities in West Bromwich, the Black Country and the wider West Midlands. I'm sure that many other honourable members will have similar stories to tell about their local building societies in their constituencies. We've heard many of them already today, and I'm sure many will have or will continue to hold accounts with them. An example of how much local people value the West Bromwich Building Society is that last summer, in July, the Black Country Living Museum opened their own branch of the West Brom. It replicates the former premises in Cape Hill, Smethwick. Is set in 1949. I went there last summer and it was amazing to see the beautiful old building. They have the little yellow books, and it's a great way of teaching children about, one, the history of our local community, something that we're really proud of, but also educating children about financial incentives to save and home ownership. The storied history of our local building societies and the success they've achieved through supporting their members to home ownership shows us that this model continues to endure and delivers for our constituents. But with all such institutions, they must evolve. Madam Deputy Speaker, given the illustrious history of many of our building societies, as I've just outlined, it's only right that we continue to support them, as this bill does. And I'm pleased that the Government is supporting it, as it will go a long way to supporting the nearly 23.4 million investors and 3.5 million borrowers who are members of the 42 building societies in the UK. I know that many people in my constituency and across the country rely on building societies for that most important function, providing their mortgage. Although the amount of people using building societies is now significantly lower than it was pre-1997, they still account for over a fifth of mortgages. I've heard for myself just how much of a vital community asset these financial institutions are to so many, and I know that the Building Societies Association is supportive of these measures today, and are especially pleased that we're excluding the 3 types of funding outlined in the bill from the 50% limit on members' funding, as the original 1986 sets out. The bill before us today, although not a drastic change to the way our building societies operate, will allow the societies to raise a higher proportion of funds from sources other than members' savings. It's been met with approval from the financial industry and follows on from consultation which the Government published in December 2021, and the following responses published the year after. This did include the input from 3 building societies, and there was a broad consensus that this is the right change to progress with, especially as it will allow for more flexibility in access and liquidity. These changes will also allow building societies to continue to play their unique role and maintain the gap between how they operate and the banks. Madam Deputy Speaker, I know that the bill before us will reassure both consumers and the industry that we support this important part of our financial services industry, equipping building societies as they embrace the changing way that we save with the increase of online options. The West Brom is just one example of the many across our country, and I look forward to continuing to work with the industry to do what I can from this place to support them. I'm pleased the Government has listened to the results of the consultation and is continuing to back our building societies. This bill is the perfect demonstration of that.
James Daly.
Thank you very much indeed, Madam Deputy Speaker. And can I congratulate the Honourable Lady in bringing her bill before the House. And I think I better make reference to my registered member's interest being a practising solicitor and a partner in a firm of solicitors. Now, Madam Deputy Speaker, it is probably I won't say the worst of MPs, but the MPs who stand up and say that everything that I had in my speech has already been said, are obviously claiming credit for things that they haven't yet said. But having followed such outstanding speeches and having listened, especially to my honourable friend from Dover, who set out exactly the technical case as to why this bill is needed, I'm going to keep my remarks to the social, or what I would call the social and cultural case for building societies. And what I mean by that is that in a previous debate in this House on a separate subject, I talked about Gig Lane, a football stadium in my constituency, and what has that got to do with building societies? Madam Deputy Speaker, well, it's got this to do with it. Gig Lane was bought by a person, it is bought in a capitalist society, but Gig Lane is an institution of cultural and social value to the area in which it sits. So the question, therefore, was, that I posed to the governments at that time, when we are considering sporting institutions in that sense, do we view them in the same way as we would view a branch of Tesco's or a branch of Sainsbury's, great businesses that they are? Or do those businesses and those institutions that act within the financial market but have a great social contribution and history to make to their local areas, do we have to view those somewhat differently? And I think in terms of building societies, there is an argument in respect of that. And certainly this debate does make me nostalgic, Madam Deputy Speaker, because my university days were spent behind the counter at the Yorkshire Building Society in Huddersfield. And in terms of the people, and it was for many, many years I worked there. And so, as my honourable friend has said, as a board member of a building society, but from my experience of being behind the counter, of talking to people, not only is this a building society's important financial institutions, they're important social institutions. I used to see the same people, perhaps every day some, but certainly every week, who would come in, and it was about company, it was about community, it was about family. And that has been reflected in the remarks that we have here today. So we have this institution, which has been in place since, as the Honourable Lady said, since 1775, when Ketley's Building Society was in place. And we have seen it being I would say, change as a reflection of society. But we must, as politicians, I think, do everything we can to protect it. And this is fundamentally a measure regarding fairness within the market in which building societies carry out their business. And it is allowing them not only to do the social good that they have done for over 250 years, but also to survive. One of the things, and we could have a huge debate in respect of this, but we are here talking about the 1986 Act. And one of the things that the 1986 Act did, it allowed, in effect, banks to demutualise and become fully fledged banks. And we saw Halifax, we saw Abbey National. Now, as a capitalist, that's clearly a good thing, freedom of choice within the market, but is it? We've seen what's happened to the market since then, as my friend has ably set out. Has that benefited the banking sector? Has it benefited the country? Has it benefited those members who were part of those great institutions? Halifax, I mean, from where I'm from in Huddersfield, Halifax was a huge employer, was a huge cultural institution, and has somewhat been diminished, sadly, as a result of the actions and the opportunities that the Act gave. And I think that this piece of legislation, or this amendment to the Act, is somewhat addressing the problems that the original Act put in place. So I think it is important, and the Honourable Lady ably set this out, to reflect briefly on the history of building societies, because building societies developed as a response to societal changes. And as has already been stated, this was a means which allowed people with ambition, people who wanted to own their own home, a means and an access to capital to be able to do that. So it was a positive. It was what I would call Disraelian conservatism. And again, I'm nowhere near as articulate as my honourable friend from Norfolk in respect to this. But Disraelian conservatism, to me, says that there are certain enduring institutions within society that government and the state must do everything to protect. Now, that can be viewed as the monarchy, it can be viewed as all types of things, but I actually think that building societies fall within that. Their good is such, they have so much social good that we must be somewhat, and I hate using this word, protectionist, or ensure that they are allowed to flourish. And if we look, and again this was already said, I mean, if we look at how and the development of societies and the changes within our society, self-terminating building societies, which meant as has been very ably said, that when all members within the society had a house, the society was terminated, they were still going in up until 1980, when the first Salisbury district, Perfect Thrift, now that's a great name for a building society, came to an end. So we have seen legislation. We saw the Building Societies Act of 1874. That responded to legislative growth, that provided legislative backing to allow for the growth of societies. And by 1910, there were 1,723 societies in existence across the country. Building societies after that went into decline, but again then we saw a period of boom, well, I'll say boom, but of expansion in the 60s and 70s. And the Building Societies Act of 1962, which granted further powers to building societies, was the charger for that. So what we are seeing, and what we're seeing with this, is that legislative amendments provide building societies with the opportunity to develop their businesses, to thrive and succeed in the market in which they sit. Now, it is a fundamental that the great names, I think we have 42 or 43 building societies left. It is fundamental that we allow those building societies to thrive. I have concerns. We talked at length about banking in the rural areas, but banking in somewhat urban areas such as mine, I'm sure in other constituencies, Ramsbottom, a great town of mine within my constituency, there are no banks on the high street now. We have a banking hub, but a banking hub, I'm afraid, does not provide the social benefit that a building society provides. And then I look at the profit of a Barclays bank, or it could be any bank whatsoever, and I am constantly, as a free marketeer, capitalist, looking at those institutions where social good, if you have a profit of 1.6 billion, which I think Barclays did for the last quarter of 2023, I wonder why there is not the capacity within the system to maintain a branch presence in many towns throughout the country. So I think that building societies, in terms of their social mission, their moral mission, are fundamental to our financial sector. So I don't intend to make further comments because everything has been very articulately set out, but we are blessed in this country to have institutions who have their origin in the mid-1700s, who have developed and responded to social and political need. I mean, Madam Deputy Speaker led us to think that it was building societies that effectively increased the franchise. People who could vote in the 1800s were people who owned a house. Those people who were voting would not have been able to do that unless building societies lent them the money. They have had such a huge impact in every way, shape and form. And so this is an amendment to the Act which is about fairness, it is about competition, it's about benefiting first-time buyers, it is much to recommend it, and I thoroughly support it.
Anna Firth.
Madam Deputy Speaker, I'm going to keep my comments very brief, not least because we've had so many learned and expert speeches, in particular from my honourable friend, the member for Dover and Deal, but also from the member for Norfolk. But that's not the only reason I intend to be brief. It's because we have many important bills that we want to discuss today. Not least of which, of course, my own pet abduction bill, which is coming next. But I do want to congratulate the Honourable Member for Sunderland Central for bringing forward this important piece of legislation today. I do fully support it. I declare immediately an interest. I've had a number of mortgages over my time. We currently have a mortgage with the Halifax, and of course we've had various savings accounts, so they're none with building societies at the moment. But building societies fulfil a fantastic purpose. They are often, and we've heard it today, the last institution standing on many high streets, still providing that face-to-face banking service. And that's exactly what is happening in my own constituency in Leigh-on-Sea, which I will come on to. But I welcome this because what this is aiming to do is to put the building societies on a more level playing field with other retail deposit takers, such as banks, in particularly in relation to their capital raising and corporate governance requirements. It's going to make them more competitive. They're going to be, therefore, more effective in the financial services sector, and also, not only will they offer more to my consumers and to my constituents, they will offer better support to their members as well. So I can only see positives in this, particularly everything we've heard about the support that building societies give and have done for many, many years to the first-time buyer. And I'm sure we all have our stories to tell on how exciting that was when we did get our first mortgage and our keys to our very first flat in my case, and what an important step that is for all of us. You know, after getting your first job and starting to pay tax and make a first contribution to this society and the economy, the very next thing really is getting your first home and becoming a stakeholder in our property owning democracy, which sadly isn't available for as many as young as it was in my time. And I think that is a crying shame, and I hope very much that with this bill we will see building societies begin to expand even more into that first-time market. But the thing I really wanted to talk about was the fact that bank branches have closed in recent years in Southend West. I don't have a single bank now in my constituency offering that essential face-to-face service. I only have the Nationwide, a fantastic building society on Lee Broadway.
Would my honourable friend give way?
Of course I'll give way to my honourable and learned friend.
On that very point, as the Member of Parliament for Nationwide, whose headquarters are in Swindon, I'm delighted that she mentions both that building society, its leading role in mutuality in this country, and its commitment to high street branches, which is a vital lifeline for our community. I'm grateful to her.
And I'm grateful to him for his intervention, because Nationwide do so much in all of our constituencies in which we have one. My Nationwide in Leigh-on-Sea has a dedicated cost of living expert who's helping the most vulnerable members of our society navigate the challenges caused by the cost of living crisis. The branch is also going out of its way to ensure that people who are not as tech savvy as some of the rest of us, particularly the elderly, and I have a very elderly constituency in Leigh-on-Sea, get that extra help. They have tea and tech events, which are very popular, which teach people how to use online banking and apps to manage their money. Digital exclusion is a real problem in our modern society, and it is so encouraging that the building societies are doing so much more. I could wax lyrical about all the other things that the Nationwide are doing, but because of the bill that's coming next, I'm not going to on this occasion. But I do just want to come back to end on this need for these face-to-face banking services. Because the banking hub is a very good model, but none of the banks will do that if you have a building society in your constituency which is providing those face-to-face services. But one should not exclude the other. And I just want to take this opportunity, this is something which I have been campaigning on, but it seems a very fitting moment as well to pay tribute to my honourable friend, the member for Derbyshire Dales, for her Save the Banks campaign, which I also wholeheartedly endorse. So just to return, I fully support this bill. I thank the honourable member for bringing it in. I hope that it will ensure that building societies can do even more for our local communities, not just in mine in Southend West, but across the whole country.
Shadow Minister Tulip Siddiq.
Thank you, Madam Deputy Speaker. And I'll just start off by congratulating my honourable friend for Sunderland Central for bringing this important bill to the House for debate. It is very lucky to get the first slot on the private member's bill, but it also takes a lot of work to find a bill that generates such cross-party support and talks to such an important issue as we've heard today in the House. I hope you'll indulge me for just 1 minute, Madam Deputy Speaker, while I speak a little bit about the fabulous work that my honourable friend for Sunderland Central has done in the House, because it's not often we get to talk and congratulate our comrades in quite this way. In the House, and she's been here since 2010, she's done some valuable work on the APPG on state pension inequality for women, and I think everyone will recognise the work she's done on that. But even before she came to the House, she worked very closely with the National Asthma Campaign to make sure that life was easier for people who suffered with asthma, people like myself, and I commend her for that, and all the work that she did with GMB to change the law around compensation that's paid to victims of asbestos-related diseases. So this isn't the first piece of legislation that she's worked on, but it's an important piece of legislation, and it shows how valued she is as a member of the House. I also know how closely she's worked with civil servants and ministers and the Treasury in recent reports to actually produce a bill that gets such cross-party support, and one that the Treasury ministers approve of, which is very rare from all my dealings with him. So I'm delighted to say we on this side of the House will be backing this bill wholeheartedly today. I also want to acknowledge the important work of the Labour Party's sister party, the Cooperative Party, and the wider mutual sector, including the BSA and Nationwide, for all their time in feeding into this bill. Building societies have had a long and proud tradition of supporting working people to access affordable finance, and that point has been made continuously in this debate today. The sector continues to play an invaluable role in promoting financial responsibility and resilience among its members, and this includes supporting young families to take their first step onto the housing ladder. Building societies direct a great proportion of their lending to first-time buyers than any other part of the financial services sector. Building societies supported 70,000 first-time buyers in the first 3 quarters of 2023. And since 2020, building societies have supported 360,000 first-time buyers. That's over £63 billion provided to help people buy their first homes. And that's why this bill is so important. It will empower societies across the UK to raise more funds and help our vulnerable constituents. And indeed, as my honourable friend, the member for Sunderland Central, set out in her very compelling speech today, her bill could unlock significant additional lending capacity from building societies to support more working people to become home owners. And I think the Right Honourable Member for Mid-Norfolk, who isn't in his place, he is in his place, just moved across slightly, he talked a bit about how every £10 billion of new lending capacity, which is secured through these changes, potentially supports an additional 20,000 first-time buyers. I have to say I agreed wholeheartedly with everything that he had to say, and dare I say, sometimes he sounded quite socialist in some of the comments that he made, but he doesn't agree with me on that front. This debate has indeed been very interesting because I've agreed with lots of the members, and in fact, the Honourable Member for Dover even quoted the first Labour Prime Minister favourably. This is when I say there's plenty of spaces in the opposite benches if anyone ever wants to come across. Indeed, building societies have never been more important in the UK's economy and public life. As a result of the cost of living crisis, many families, as has been noted, have been forced to use their savings in the face of rising energy prices and food prices. But its building societies have continued to support people to save, supporting people to build financial resilience during this very difficult period. It's attracted £18.9 billion in cash savings during the first 9 months of last year. It's bucking the trend of the decline in saving balances that we have seen across the wider sector. So building societies have proven resilient in the face of hardship, and we also saw the role, and this point was made from lots of members opposite, that the sector played during the pandemic. Leeds Building Society, finding that the requests for mortgage deferrals had increased to 2,000 a day, increased their use of robotic process automation technology to create a fully automated web form for customers. While at Nationwide, a team of mortgages, technology and AI specialists trained the Society's virtual assistant, RT, to handle common COVID-related mortgage queries. It's the resilience that's allowed the sector to support their members, whether through COVID or the current cost of living crisis. And that's why Clause 1 of this bill is so important, allowing building societies to exclude funds accessed from the Bank of England in stressed scenarios, types of loss-absorbing debt instruments and sale and repurchase agreements from the funding limit. This will level the playing field with banks and provide that extra level of protection for building societies during times of financial crisis so that they can continue to support their members for many decades to come. As I mentioned earlier, in recent years, we've seen many building societies adapt to new challenges and adopt exciting technologies and digital ways of working. Principality Building Society has delivered an online mortgage payment holiday service in partnership with the fintech company Podium Solutions. The service allows members to access a mortgage holiday repayment calculator and an online application process to better understand their mortgage outcomes. And that's why the changes introduced by Clause 2 of the bill that would allow real-time virtual participation in annual general meetings are long overdue. Building societies have proven time and time again their ability to innovate and adapt to changing consumer behaviour. I agree with the Honourable Member for Dover when she talks about how other places have moved on, but in Parliament we are doing it face to face. But that means we should cater to changing consumer behaviours, and there's no reason to subject the sector to outdated restrictions that don't apply to the wider financial services sector. And turning to Clause 3, likewise, it paves the way for reducing the administrative burden with executing documents with similar provisions which are already in place for banks. And that's why I will be enthusiastically supporting this bill. Because on this side of the House, we believe that further legislation is needed to level the playing field, secure the future of the sector and achieve our ambition of doubling the size of the mutual and cooperative sector, of which building societies play a critical part. And that's why on this side of the House we have committed to requiring financial services regulators and to report annually to Parliament on how they have considered the specific needs of mutuals, including building societies. We recognise this as an important step forward, and we will be giving the bill our full support today. And I look forward to being on the same page as the Treasury Minister opposite. He'll be pleased to know. So thank you, Madam Deputy Speaker. And a final word of congratulations to my honourable friend who has done a tremendous job of putting together this important bill.
Minister Nigel Huddleston.
Thank you, Madam Deputy Speaker, and I'd like to begin also by congratulating the Honourable Member for Sunderland Central for one, being lucky, and then secondly, choosing to be impactful by introducing a bill that will help to support the future growth and success of the mutual sectors. And I understand that her husband, Andrew Fletcher, is in the gallery today observing her performance, and I'm sure he will be rightly proud of the work that she's doing, working with others to make a real impact on people's lives right across the country. Because I know that the Honourable Member for Sunderland Central is driven by a desire to support building societies so that they are able to compete on a level playing field with retail banks. And I'm pleased to say that the government shares this desire, and from the speeches we've heard from honourable members today, that message has also been clear. I'll just run through some of the comments that we've heard. There were some excellent speeches today. The Honourable Member for Mid-Norfolk, whose insights on labour cooperativism and civic conservatism was a true tour de force for all of us, and he spoke, as always, passionately about the importance of mutuals in rural areas. And then the Honourable Member for Stoke-on-Trent Central spoke warmly about the importance of community banking and mutuals in more urban areas, again reiterating the importance of these institutions right across the country. I also agree completely with her comment about the contribution of the over 70s in society. The Honourable Member for Dover spoke passionately and very knowledgeably about her own experience with mutuals, in particular Principality, and she raised points about the logistics as well of arranging virtual meetings and a few other matters, and certainly I will make sure that that my colleague, the Cities Minister, is aware of some of her comments as well. She also spoke very warmly about the human experience she had, as we often see in this sometimes remote area of banking. We are dealing still with human beings, about her interactions with Mr. and Mrs. Jones, for example. And in a rare experience, we've heard somebody volunteer to be a member of a bill committee today. The Honourable Member for West Bromwich East spoke of her affection for the West Brom and the role of mutuals in the West Midlands, and in particular the role that they play in promoting and encouraging the habit of saving amongst young people, and also, of course, promoting home ownership via mortgages. The Honourable Member for Bury North laid out the strong case for the social and cultural impact for building societies, talking about nostalgia, but also making it very clear that we need to all work together to make sure that building societies and mutuals also have a thriving future. And the Honourable Member for Southend West also expressed, very importantly, her appreciation for the physical presence of so many building societies still on our high street, particularly in the context of digital exclusion. So, Madam Deputy Speaker, we want to ensure that building societies are supported so that they can continue to give people greater choice in where they put their savings, get their mortgage, or in some cases, open their current accounts. So today I want to do two things. First, set out why the government values the mutual sector, demonstrated by recent steps we've taken to ensure legislation is updated so that they are able to grow, compete and succeed in the future. And of course, many have referred to the recent consultation on some of these matters. And then secondly, I'll briefly outline why the government is fully supportive of the objectives and principles of this bill, and I hope the Honourable Member will set me right if I misinterpret the details of her bill in any way. Madam Deputy Speaker, the government recognises the valuable contribution that mutual businesses play within the UK economy, as well as within the local communities in which they operate. Their unique ownership model means that these businesses are driven by the core values of openness and collaboration. Every member gets a vote and therefore a direct say in how the business operates. Given their unique ethos and desire to drive positive change in society, as well as the vital role they play in our economy, it's natural that the government has committed to supporting the mutual sector to ensure their place in our future. For example, through the Financial Services and Market Act 2023, the government amended the Credit Unions Act 1979 so that since last summer, credit unions in Great Britain can offer a greater range of products and services. To date, the government has also allocated £145 million in dormant asset funding to Fair for All Finance, which works to improve the availability of affordable credit, including through support for community finance providers, strengthening the growth of credit unions. Moreover, last year the government supported the Honourable Member for Preston's Private Members Bill, which achieved royal assent in June 2023. And the government continues to develop a modern and supportive business environment and has asked the Law Commission to conduct reviews of the Cooperative and Community Benefit Societies Act 2014 and Friendly Societies Act 1992. To further support the sector, the government's also progressing secondary legislation changes to the Building Societies Act 1986, delivering on the Edinburgh reforms. And alongside this bill, these changes will help modernise the 1986 Act, helping building societies to grow and compete on a more level playing field with the retail banks. Now, relating to the bill directly in itself, the government sees this private members' bill as a great way to support building societies, ensuring that they can compete with retail banks on a more level playing field, while continuing to provide essential competition within the UK financial services sector. This will deliver on key asks from the building society sector themselves. As the Honourable Member for Sunderland Central has set out, the bill makes provisions in three key areas. First, funds that can be disregarded by a building society for the purpose of calculating its wholesale funding limit. Second, allowing real-time virtual member participation in building society meetings. And third, aligning provisions in relation to the execution of deeds and other documents to that of companies law. I'll comment briefly on each. The Building Societies Act 1986 sets out building societies' distinctive model and other legal requirements. And under this Act, building societies are required to obtain at least 50% of their funding from individual retail deposits, ensuring that the members are the primary owners. This funding limit is a key feature of building societies' unique ownership model, ensuring the business is mutually owned and run for the benefit of their members, while still retaining this at least 50% funding model and thereby maintaining building societies' unique characteristics and core values. This bill will enable the exclusion of three key sources of funding from counting towards the wholesale funding limit, which are accessed or held for regulatory purposes. And these will be further specified by the Treasury in secondary legislation. The other amendments to the Building Societies Act by the bill relate to the modernisation of building societies' corporate governance requirements so that they can operate under the same modern governance flexibilities as companies. The first of these is an amendment to the 1986 Act to allow for the option of real-time virtual participation at building society meetings, something that the Honourable Member of Dover focused on in her speech. Now, this change will help to modernise the day-to-day practices of these societies, promoting greater membership engagement and improving accessibility of these meetings. And this will be updated in line with rules for retail banks operating under the Companies Act 2006, ensuring building societies and retail banks are afforded the same flexibilities. The second of the amendments to building societies' corporate governance requirements relates to that of common seals in the execution of documents. And this bill will provide Treasury with the power to make secondary legislation to align the constitutional provisions in Part 2 of the 1986 Act with updates to company law concerning common seals and the execution of documents. And this will give building societies useful flexibilities that will ensure that building societies continue to operate on a level playing field with retail banks. Madam Deputy Speaker, I've outlined the government's support for the private members' bill brought forward by the Honourable Member for Sunderland Central for second reading today, and I again congratulate her for it. We expect the bill will be greatly welcomed by the mutual sector, and it's clearly got support from across the House. The government intends to work closely with the Honourable Member for Sunderland Central in progressing this legislation through Parliament The Government's goal, and the goal of the bill, is to modernise the Building Societies Act 1986 so that building societies are able to scale, grow and succeed into the future. And for these reasons, the bill has the wholehearted support of the Government.
With the leave of the House, I call Julie Elliott to wind up.
Thank you very much, Madam Deputy Speaker. And I have to say what a pleasure it's been speaking in a debate where everyone is on the same side. It's a refreshing change and not usual. The Minister must not think that that will be the future of our confrontations. However, can I thank so many members for coming in this morning and taking part in the debate. It's all of the people have given a slightly different perspective on why building societies are so important. I just want to refer to a few points. I certainly didn't expect this morning's debate to have so much political history in it, whether it's civic conservatism or Labour history. But the Honourable Member for Mid-Norfolk, I just have to inform the Honourable Member that the Clause 4 I was referring to was the Clause 4 of the new Labour Party under the leadership of the former member for Sedgefield that came in April 1995, a very different Clause 4 from the old one. But I also want to thank him for raising the issues of rural communities and villages. I come from a village, a beautiful village called Whitburn, which is in the constituency of my honourable friend and neighbour, the member for South Shields. So I totally understand the way villagers rely on services of local shops and businesses. And actually, the honourable member may not be surprised to know that actually more deprived areas of the country, the majority of which are the areas in my constituency, actually have many of the same issues as the rural community. And I have to mention the contribution for the Honourable Member for Dover, who has such experience in this area. And in fact, that's how I first met the Honourable Member when she was doing her work in building societies, and has done huge amounts and probably understands this bill better than anyone in this House, including me. This has been a sharp learning curve. But the other thing that it was very nice that the Honourable Member mentioned and quoted Ramsay MacDonald, the first Labour Prime Minister. And as we are in the week, in fact on Monday, of the 100th anniversary of the first Labour government, as we have such an array of political history, I'm going to mention that as well. But in finality, I want to say that this bill, as I said in my speech, it is simple, it is straightforward, it is modernising. There are little measures that can make a massive difference, and I hope if we're talking about housing in the future, we can refer back to the difference that this bill will make in freeing up more money, modernising the system to enable more people, particularly first-time buyers, get on the housing ladder. Thank you very much.
The question is that the bill be now read a second time. As many as are of that opinion say aye. Aye. Contrary, no. I think the ayes have it. The ayes have it. We now